Hello everybody, welcome to today's fundamentals. Hello Pedro.
Hello.
What's up in the FX market?
Well, continuing from yesterday, the euro has been moving in a downward trajectory as inflationary pressures in the eurozone appear to be easing. Now, despite the, one could say, sensitive, hawkish comments made by ECB policymakers previously in regards to the hikes, it appears that the markets are now anticipating that due to the reduction in inflationary pressures, that the ECB is more and more less willing to continue with its aggressive rate hiking policy, and as such has been moving in a downward trajectory. The pound has also been moving in a downward trajectory. However, it appears to have found some support following statements made by BOE's man yesterday, where she said that inflationary pressures are still higher in the UK than they are in the Eurozone and the US, hinting potentially at the UK Central Bank increasing interest rates in the near future, and as such has found some form of support following those comments. The Aussie has been moving in a downward trajectory, continuing since the past few days. The dollar yen has also been moving in a downward trajectory as markets appear to have taken the BOJ's emergency meeting yesterday as a relatively hawkish stance, and with the ECB coming out and saying that any change in Japan's ultra-loose monetary policy would be potentially catastrophic. It appears that since the ECB is taking the comments made yesterday slightly more seriously, traders may be expecting that the yen will appreciate in regards to the euro. Moving on as well, the greenback against the Turkish lira is continuing in an upward trajectory. As was also mentioned yesterday, we're anticipating the release of the Turkish cabinet on Friday by newly elected President Tayyip Erdogan, where should he indicate a potential willingness to abandon his ultra-loose monetary policy as well, then perhaps we may see the Turkish lira gaining some ground. Yet that currently appears to be unlikely, given that even though the current economic situation exists in Turkey, President Erdogan was able to be re-elected to the position of president for a second time, and as such may be unwilling to change his economic policies. The loonie against the dollar as well, the loonie has been appreciating against the euro. Now, this could be in part of Canada's better than expected in certain areas. So on a quarter-on-quarter basis, the expectations were lower than what the actual figures were, hence providing some support for the loonie, which in turn has resulted in it being appreciated. Yet, in some other figures, the loonie did not meet expectations of a growth, but nonetheless did post better than previous earnings, growth rate.
And how has gold's price been reacting?
Well, gold's price is currently moving in a sideways direction, having broken above support at 1955, which was our previous level, and appears to be moving in a sideways motion as, despite progress being made in the House of Representatives, there is still a very minute risk of the US potentially defaulting. Hence, due to this risk, gold's price appears to be moving in a sideways direction until the matter is resolved. Where should a deal be struck, which is expected, being voted through by the Senate, then we would expect that gold's price would move in a downward trajectory, whereas in the very unlikely event that that deal is not passed by the Senate, then we would expect gold's price to move in an upwards fashion.
And how about US stock markets?
The US stock markets have been moving in a downward trajectory. However, in the past day, following the House of Representatives, voting the debt ceiling deal through, the equities markets appear to have found some support, moving in a slightly upwards motion. However, from a long-term perspective, the US stock markets have been moving downwards. Also, Amazon settled in regards to Ring violating some privacy concerns by the FTC, which may have provided some slight weakening in the markets as well.
And how about oil prices?
Oil prices have been surprisingly going in a downward trajectory. Now, the reason why it is surprising is that the OPEC Plus announced that no foreign reporters from major news outlets such as Reuters and Bloomberg would be allowed to attend the meeting, which is highly unusual for an OPEC Plus meeting, where they would expect coverage to be maintained throughout the meeting with the news reports coming out as to potential indications of the group's intentions, whether to increase oil production or perhaps even cut oil production. So the lack of news reporters means that the current market situation could be considered slightly more volatile, as we lack the news releases associated with the event. However, one could expect that given Saudi's dependence on oil, they may be attempting to push further production cuts through the meeting. And potentially the reason for not allowing reporters could be perhaps to strike a deal with Russia, and perhaps the UAE, which has stated that they would have liked to increase production previously. So currently moving in a downwards trajectory, but should it reverse course, I would not be surprised.
And what's in today's calendar?
Well, starting with the European session, we note the Eurozone's preliminary HICP rate, which is, according to analyst expectations, expected to decrease. Now, should this happen, we would expect the euro to further weaken against the dollar as inflationary pressures continue to ease across the Eurozone, as was supported by Spain's, France's, and Germany's HICP rates. Excuse me. Then we may see the euro further weakening. Furthermore, we have ECB President Lagarde, which is due to speak about half an hour after the release of the preliminary HICP rates. Now, we would expect, could expect some form of indication to the ECB's next actions based on the preliminary HICP rates.
And how about the American session?
Well, the American session begins slightly after the release of the ECB's monetary policy meeting minutes. And what one could expect for dollar traders is the ISM manufacturing PMI figure, the ADP employment figure, and Philadelphia President, Harker is also due to speak. The reason why we're highlighting Fed President Harker is the fact that his statements yesterday sent some sort of waves across the markets where he indicated that he was willing to skip the FOMC's next meeting. Now, despite him saying that skip does not necessarily mean pause, by skipping the next meeting, that would mean that the current interest rates would remain at the current levels. Hence, the markets may be anticipating some form of pause from the Fed sooner rather than later, with the Fed funds futures expecting that in their July meeting that the Fed will actually remain on hold. So given these comments, it would be interesting to see whether or not he attempts to retract some statements, or whether or not he will try to add to the statements to provide some sort of degree of clarity.
And any news from the US Congress?
Well, yesterday, as was mentioned for our gold analysis and stock markets, etc., the US House of Representatives passed the debt ceiling bill through with bipartisan support, if I'm not mistaken, with 315 votes in favor of the bill. But what was interesting was the fact that the House Democrats overvoted in terms of numbers the House Republicans. Now, this indicates that the Republican hardliners that are opposing Speaker McCarthy, who himself is a Republican, may have been growing. Currently, there's no issue at hand, given that it's passed and will be moving to the Senate for a final vote before reaching US President Joe Biden's desk in order to be signed into law. However, the fact that there's a growing opposition could mean that in the long run, the Speaker may be facing some problems when passing future laws and bills. Now, with the Senate, it is expected that the bill will pass, and with expectation that it will pass, we could potentially avoid the US default date, or so-called X date, which was suggested that from US Treasury Secretary Yellen, which could be as soon as June 5th, which is Monday. So should the bill pass through either today or tomorrow, then we would avoid the US default. Yet, should it fail to pass through, which once again is a unlikely scenario, then on Monday the US could potentially default on its debt, which could have tremendous implications in the US economy. However, we do expect that the US debt bill will pass through, hence avoiding a US default.
Great. Thank you, Fedor, for your time and everyone for watching. Join us after a short break for technical analysis.
Hello and welcome back to another technical analysis. Today we're going to be looking at gold. As we mentioned before, gold now appears to be moving in a slightly sideways motion, having hit the top of the Bollinger Band and is now testing support at 1,955. So should it remain between S1 and R1, we would anticipate and hold a sideways bias, given that the RSI indicator is at 50, hence moving in sideways motion. And in order for the sideways channel to be revalidated following this one here, we would expect the price action to move to R1, fail to break above, and then remain within this channel. Yet, should it break S1, we would expect it to move downwards and test support at S2, which is 1,935. And then, should it break S1, we would hold a bearish outlook. Whereas, should it break above R1, then we may expect it to test resistance at 2,002. Hence, by breaking by R1, we will maintain a bullish outlook for gold. Moving on to the US dollar index, we can see on the daily chart slight strengthening despite having broken below the upwards moving trend line. It is still remaining within the R1 level. Hence, we can see some bullish sentiment surrounding the US dollar, given that they're nearing to raising the debt ceiling for approximately 2 years. So, as we can see with the euro dollar, the greenback failed to break. Well, it did break below S1, but then retraced back up. Hence, we still maintain a bearish outlook as our downwards moving trend line is still validated. Should it break above the downwards moving trend line, hence also perhaps breaking above R1, then we would switch to a bullish outlook, which would allow for the pair to test resistance at R2. We should also note that given rhetoric, hawkish rhetoric, that the bank will still have to fight inflationary pressures within the Eurozones, then the bank may decide to continue increasing interest rates, aka hiking. Hence, we may see the common currency gaining and breaking above R1. And should that happen, we will switch to a bullish outlook with the next potential target for the bulls being R2 at 1.0805. Now, note how we noted the RSI bouncing off the 30 indicator, yet moved in a slightly sideways motion. Despite this, we do see some bearish tendencies within the market as we maintain a bearish outlook. So should it break below S1, we would expect a move to S2 and would test support. But having previously broken S1, we maintain our bearish outlook. Moving on to the pound. On the daily, we see that the pound gained slightly yesterday following the hawkish rhetoric, that the bank may continue its aggressive interest rate policy. Now we would bring R1 would switch to support. So resistance now turns support. Yet given the new information that we currently have, I would bring support 1 higher at 1.2395. So this would be S1. Keep in mind that having broken the downwards moving trend line, we maintain a bullish outlook for the pound. So S1 would be, as was mentioned before, R1 would be R1 would maintain at its current level, perhaps brought slightly lower. But personally, I would still prefer to keep it as it was previously. 1.2465. So that would be R1. Now, should the hawkish rhetoric intensify from the Bank of England, then we would expect that the pound will gain against the dollar. So the next potential target for the bulls, should that happen, would be around the 1.2535 level. So this would be our R2. Then we bring our resistance slightly higher. 40 pips could be easily broken. Hence, with the new data, 1.2610, 2,610. Would be R3. Now, in terms of technicals, it's reached the upper bound of the Bollinger Bands, and it would not surprise me should the price action move back towards S1, which would coincide with the mid-range of the Bollinger Bands before moving higher. Now, we should also note that the RSI indicator is above the reading of 50, implying a bullish sentiment. Yet, since it's not above 70, it does not mean it is overbought, but we would still maintain our bullish outlook. And now we could form an upwards moving trend line. The reason why we would not form an upwards moving trend line from this point here is that personally, this is slightly too narrow, and given that the wick without enough substance, so substance in terms of a body, such as this bearish candle here or bullish candle here, and is instead a wick, for me, signals that this may not be as stable, whereas forming a swing low would give greater emphasis for me when adopting an upwards moving trend line or a downwards moving trend line, etc. So we can see two touches, 3, 4th, and 5th, and 4th and a 5th. So should it break below S1 and break below the upwards moving trend line, then we would switch to a bearish outlook. Whereas should it come back to test support, bounce off, and move upwards, we would maintain our bullish outlook. So currently the pair appears to be moving in an upwards trajectory, having broken above S1. So moving on, today we could look at, excuse me, oil. Oil is moving in a downwards fashion. Now, as you can see, it broke through our S1 that we placed. So S1 would now be turned to resistance. Support turned resistance. Now, given OPEC Plus to refuse entry, which apparently, according to news sources, was a push by Saudi Arabia, so to prevent foreign media from reporting on the event, which, as we said before, is highly unusual. This could be in an attempt to garner support without public pressure in regards to more oil cuts, as Russia has been known to, well, fail to hold up their end of the agreement on oil cuts by using third countries to export their oil, hence increasing the price of oil by increasing its supply. So by refusing entry to the media, Saudi Arabia may be trying to garner votes from Russia and the UAE, which has previously stated that they would like to increase oil production in order to generate a higher degree of revenue. And since they have an abundance of oil, they could also influence the market. So by removing the public spotlight, it might be easier for Saudi Arabia to convince its partners to proceed with oil cuts in order to raise the price of oil and gaining more revenue. So R3 will be at 73.50, R2 at 70.75, and R1 is support now to resistance. So that would mean our S2 will turn to an S1, but yet I would personally prefer to bring my S2 slightly in the middle between current S1 and S3. Yet, in order for us to achieve this, we need to go quite far back. Previous swing high. That would be my S2. However, before we keep our S2, I would like to maintain, can't go that far back. So we're going to keep S2 at this current level, 63.75. As a matter of fact, prices last seen in 2021. Which is interesting. Should it reach S2? 63.75. This now is turned into S2. The main events of the day will be whether or not the Senate does pass the debt ceiling bill. Now, since it's a Thursday, that might give them some slight leeway should they try and posture themselves, let's say, in opposition of the bill. So perhaps gaining some concessions from majority or minority leaders in the future for perhaps some of their bills that they may want to pass through in the future with support. So it's possible that the Senate may decide, well, Senate members decide to potentially just read the bill today, debate and discuss, and actually vote on it tomorrow, since the X date set by Treasury Secretary Yellen is on Monday. So, given that the bill passed yesterday to the House, that gives 2 days for the Senate to pass the bill, which would be instantly ratified by US President Joe Biden and then enacted into law and preventing the US from defaulting on its debt. Now, the way I'm seeing the charts right now is that it would be difficult to form a downwards moving trend line, but should we hold, should we form one, it would be starting from here. Yet, looking at the price action moving sharply lower, this downwards moving trend line would be very difficult to justify over the next perhaps few trading sessions. However, what we would like to note is the fact that the RSI indicator has broken below 30. Now, having broken below, so you can see it bounced off, failed to break above 30, came down, managed to break above 30, but is a slight curve, hinting that there is a strong bearish sentiment within the market. Having broken below 30, yet even though it has broken above 30, it does not necessarily mean that the market sentiment is shifting. It could be a temporary pause before moving further downwards, or could be the beginning of a sideways motion, yet that is a bit too far-fetched to say at this point in time. Moving on, today we could look at the Nasdaq index. As you can see through yesterday's support and resistance lines, the Nasdaq is moving slightly lower. It has stabilized around the 70 figure at the RSI below our chart. still implying bullish sentiment, yet perhaps slightly waning. Now, since this is still above 70, we would expect the Nasdaq 100 index to continue in an upwards trajectory. However, should it break below 70, that it might imply that the bullish sentiment is waning, with the potential to move to test support at S1. As we can see here, moving slightly lower on the 4-hour chart. So these are levels from yesterday. Now, on the daily, we can see that the Bollinger Bands are wide, implying high market volatility. However, on the 4-hour chart, we can see that they're slightly narrowing. Now, this may be that it has found some support before moving higher, or it could mean a sideways motion. But note the RSI indicator has broken below 70 and is moving towards 50. Hence, in addition to the Bollinger Bands narrowing with the RSI indicator moving towards 50, could imply a sideways motion, at least temporarily, for the Nasdaq 100 index. So the way we would interpret this would be bringing our S1 to the 14,255 level. So S1 would now be, as was aforementioned, testing support. So given the new data, should it break below S1, we would not switch immediately to a bearish outlook, as its testing support is pretty narrow. So in order for us to have a bearish outlook, we would expect it to break below and move towards S2, breaking below the lower end of the Bollinger Bands and reaching right somewhere around here before testing S2. That would switch our outlook for a bearish outlook. Yet, should it break above R1 and move towards R2, that would continue with a bullish sentiment within the market. As you can see, our S3 is pretty wide. So our S3 would be brought slightly higher. Since we've moved S1 to a higher position, we reevaluate and we bring our S3 to the 13,450 level. So once again, to recap, if it stays between S1 and R2, side motion, yet having broken below could imply that the market sentiment is souring, with a bearish outlook being formed. Break below S1, potential move towards S2. Now, should the RSI break below 50 and move towards S2, then we could switch to a bearish outlook bias, whereas break above and move towards R2 would imply that there is still a bullish sentiment within the market. And moving lastly is the dollar yen. You can see yesterday we anticipated some form of a sideways moving channel that has not been validated yet, but we will maintain our current levels, having broken above the downwards moving trend line and this one. We could expect the pair to move in a sideways motion, as the RSI indicator is near 50. However, by having broken above 50 could imply some bullish sentiment within the market, given that the US will probably not default, hence boosting the greenback as well across the board, as was noticed in the US dollar index, and gain against the yen, the euro on the daily, and I would expect against the Aussie as well. Slightly gained, currently moving in a sideways motion. Sideways motion may be a bit too much, but a bearish outlook would not. Staying below 50 and failing to break 50 implies that there's still a bearish sentiment, and having broken below S1, potential move towards S2, and should that be broken, potential move to S3, which is pretty wide. Yet for a bearish outlook, break above the downwards moving trend line and a break above R1 with the next potential target being R2. Moving on, US Dow Jones 30 improved given that the US potentially will not default. Once again, it's the same story. Same with the Nasdaq, S&P 500, etc., and the dollar index. Lower risk of recession and a default have been improving the greenback and the US equities markets. And that's it for today. Thanks for watching.
In today's session, we will look at platinum as a trading instrument and its appeal to investors. The precious metal has posted significant gains the last few years, especially due to rising demand after COVID-19. However, it is often ignored by investors who turn to gold and silver markets due to the higher volume. Platinum is important for the growth of the hydrogen economy, and demand could expand even further, posing plenty of opportunities for platinum buyers. In the meantime, there are possible trading risks to consider, including a strong USD and falling platinum demand. The pandemic has changed many things and unsettled demand and supply in platinum. While jewelers and car makers were not so interested in the metal as in earlier years, COVID-19 has driven money to precious metals, with many investors turning to platinum. At the same time, its supply was also hurt as lockdowns did not allow for its mining. Platinum is mined in South Africa, in Marikana, with the first platinum nuggets being discovered back in 1924. Anglo Platinum in South Africa is considered to be the world's largest producer of platinum. 7 million and 8 million ounces of platinum are used each year. Platinum plays an important role in renewable energy, especially in electrolysis and in the fuel cells that use it. The hydrogen economy refers the use of hydrogen as a fuel for heat, hydrogen vehicles, energy storage, and transport of energy. The use of hydrogen promises to reduce fossil fuels and limit global warming. Many countries, including the European Union and China, have pledged to reduce carbon emissions by 2050 to 2060 and are invested in hydrogen power. Renewable hydrogen technology generates gas from water and stores it in fuel cells to be used in homes and vehicles. The wider use of hydrogen technology in the near future will require increased quantities of platinum. The limited supply of platinum, coupled with the possibility of hydrogen technology boosting demand for platinum, provide a bullish outlook for the precious metal for the coming years. Investors would be interested to see what will happen to the precious metal and its role in hydrogen economy, but also whether automakers will return to platinum in the future, as the current prices are a strong incentive. This could also push demand for platinum higher. Thank you for watching.
So today webinar I'm going to talk about multiple moving average strategies. Okay, but before I go to the presentation, just want to highlight some of you might be interested in our VIP room. So what you can do, you can just register, okay, and then there is minimum deposit. You can see bronze 250, 1,000 or 2,000. So it depends on the tier, and then you will get to access to our VIP room. Okay, so how it look like? It's gonna be something like this. Okay, let's say if you have any question, you want to like talk with me and with the team. Okay, let's just talk about goal. Like, okay, let me click and show. For example, you want to find, let's see the entry, or you want to find a support and resistance, right? Actually, you can draw something like this. Okay, and maybe some of, for example, I draw Fibo, for example, and then you just might say like okay, like at, maybe I just put like Desmond first. For example, let's say hey Desmond, can you help, oh, okay, can you help me to check my let's just say support and resistance level, just something like that. Anything you want to ask me and the team, okay? And maybe you just highlight here, okay, and then you just link object, and then you click somewhere here, and then you just confirm. So when you send in to me, okay, I will get the chance to highlight, and then to see like which level are you talking about. And also our VIP service, we do send kind of trading idea. If me and the team we find some a good setup, we will send to the VIP room as well. Okay, so it's something like this. Okay, just if you already have the account, and then you already have deposits at least 250. Okay, and you can just maybe let the IronFX know, and then you can join our VIP room. Okay. Okay. All right, just let's start with webinar today. Like I say, today topic is gonna be multiple moving average strategies. So again, disclaimer: the information in this webinar should not be considered investment advice or any investment recommendation, but instead just educational material only. Okay, if you want to do the own trading, just do it diligently. All right. Okay, so it's about myself. My name is Peggy. I'm a trade analyst and a prop trader. At what is it? Can you see me? Okay. At the Every Fortune Group. Okay, so I do trade a prop trader trading as well. Okay. So today agenda. Why is that clicking? Movie? Why? Sorry. So today agenda, I'm going to talk about what is multiple moving average strategies, how do you use it, and how you can improve on it. Okay. So today strategy I'm going to talk about is the GoP multiple moving average strategy. Short form is GMMA, is Daryl Goofy. Okay, so he's an Australian guy. He is the one who created this technical indicator. Is quite simple to use. If you want to find like support and resistance or crossover, how to get the entry, buy and sell. Okay, which is I will going to talk a little bit later. Okay, so just a little bit about GMMA. They are using moving exponential moving average, which is EMA. Okay, so sorry, why it's not moving? Okay, so there are two type of moving average. So in the screen, you can see that the green line is a short term, and the red line is a long term moving average. Okay, so sorry guys, why I cannot see. Okay. Okay, so the GMMA, they are using two different EMA, in the offer to analyze the market behavior on multiple um um like multiple EMA. Okay, so how do you use it? Um, okay, how do you use it? Ish. Okay, you can setting on trading view if you are use trading view, or you use MT4 MT5. But I think these are indicator you can find in trading view. So the short term EMA typically set at 3, 5, 8, 10, 12, and 15-day period EMA, and the long term EMA, which is the red line, typically set at 30, 35, 40, 45, 50, and 60-day moving averages. Okay, so you can see that. Okay, and the MMA track the activity of the two major group in the market. So those are investor and trader. Okay. Oh, okay. So like I say, two group of the major group in the market, which is a trader, which is a trader is a short term. It's gonna be a green color line, and the investor, which is long term, is a red line. Okay. Okay. Uh, okay. So the trader they are think about short term. That's why we use 3, 5, 8, 10, 12, and 15 day moving averages to identify the entry. Okay, so they're using the green line, and we track okay, we do track investor. We are using 30, 35, 40, 45, 50, and 60-day EMA, because the investor, they think a long term trend. Okay, let me try to move it. Sorry guys, I don't know why my presentation, like another screen is not moving. Yeah. Okay, like say the investor, that take more time to recognize the change in trend. So we track the with investor activity by using those EMA. Okay. And how you find the trend? For this indicator, you can use to find the trend, finding trend here. For the investor long-term trend, which is gonna be the red line, and the trader gonna be short-term trend, which is the green line here, which is the arrow you can see in the screen. And the trading plan, actually you can, how it so is that we use this strategy to finding agreement on what value between the two group. Okay. This is okay. So the trader, the short-term trend they represent or who are attempt to capture the short term profit. It could be those like scalper who like in and out the market very often, and like I say, the long term investor who is more to like more to like take time to identify the trend, so they tend to hold the position longer than a trader or like scalper. Okay. Also, you can use the GMMA to find a strong trading opportunity. So how is that? As you can see here in the screen, okay, let me see. Okay, like how you identify that the relationship between the two group tell the traders about the trend of the market, a change in price direction that is well supported by both short term and long term investor. You can see that the investor signal is very strong trading opportunity. So for the GMMA, is a easy indicator I know for you to use, because it allows everyone to determine the overall trend. So you can see that it's very clear direction if you use this indicator. So you can identify, you can see red and green. It represent trader and investor really clearly. And also it also help you to easily identify on or trend. You can see that the red line is a long-term trend. Okay, it really slope down, and the green one, okay, is a short term. It's a like trader. You can see that it's like pull back to the long-term trend, which is red line. Okay, like I said, the Goofy indicator is very easy indicator, like that like help your body to determine all the trend quickly, and like without any personal bias, right? And of course you have to know that how to use it correctly as well. Not only like, oh, you see that, or when the green line crossing the red line, and then you just want to make a short or make a sell order. Okay. Again, here I will show you how to get the easy identify the overall trend. Okay. The GM. Oh, sorry. Why that's okay. Okay. So the GMM also offer the insight into potential or the period that could be consolidation by the signal, or it could be the direction of the market. And you can see that the highlight here or in the square that I put on the screen, the reversal, you can see that when the short term close below the long term, which is the red line, you can see that there is going to have reversal soon. And you can see that after it's closing, it's go to the bearish direction, right? The green line close below the red line. Okay. And you also can identify the consideration here. It's a ranging market, right? When the two group of the GMMA is kind of like close each other, like here, ranging market, you can see that how to identify trends. So I think this indicator is very good, personally very good for identify the trend if you know how to use it. Okay. And also I find this indicator is 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 quite good if you know how to um combine with the price action or another indicator, which is I will talk about it later. Okay. Okay. Yeah. Just now I mentioned price action as well, right? You can use this this indicator combined with the price action or Ichimoku crowd. Okay, I will show it you guys later. And how you can implement or how you can read the GMMA is here. Okay, I show you the real charge. Not moving here. Okay, so the degree of separation, you can see that when the short term moving average is a green line, it's close above and is far away from the red line, which means that there is very strong trend. Okay, you can see that. And then when there is a narrow separation or the crossover, it's going to like have really 10 is weak, or it's going to have like change in trend as well. You can see that. Okay, on my left, let me see if I can use my pen here. Okay, right, you can see that here. So when a narrow separation or crossover, so it's come from the cross over here, go to uptrend, right? And from here it's crossed over. So it's a change trend direction going to downtrend here. Okay, so you can use this indicator, like I say, identify trend. The green line cross above the red line is going to go to bullish. If the green line cross below the red line, it's going to bearish trend. Okay. Okay. Mm, sorry guys. Why I cannot move my the slide here to okay. Why is that move over here? I'm not so sure why. Okay. Okay. So from here, I just mentioned the crossover. So the crossover of the short term and long term, which is over here, right? The bullish, which is say the crossover here, the green line cross above, it represent the trend reversal. So from bearish, it's going to bullish reversal. So it's go up and bearish reversal. You can see that the short term close below the long term, which is green, cross below the red line, is going to bearish reversal trend. Okay. So how is the rangings look like? Okay, it's over here. So if the line is very heavily intersected, is meaning that it's lack of price trend. You can see that when it's ranging or consolidates over here, so it's not a good time for you to trade in the trend direction. You might have to wait for the price to like a big breakout of this box first. Like you can see here, if a price to break out or close below, and then you can make a short from here. Okay, so it's really, like I say again, if you want to use the indicator, you can just go to trading view and then search for GMMA, and then you can try to use this indicator to identify your trend, the market trend. Okay, so how is the long, or you want to buy the position? Like I say again, in here in the screen, you can see that the green here short term is cross above the red line. So it's over here, if you combine with the price action, you can see that this is one of the price action here. Okay, and then there is really big bullish candle over here, and then it's close above somewhere here. So when it's close above here, you can just place the buy order over here. Okay, because here it's going to already cross over, and after that you place the buy order here, so you can just put the stop loss over here. Okay, and then you can see that the price is bullish. Okay, and what about the short or sell example? Again, bearish trend. So when you see that the price or the green line is crossed below the red line, which is the short-term cross below the long-term trend. Okay, and you can see that this is heavily big bearish candle. Okay, so when it's crossed below, you can just put the sell order over here, and then you can put the stop loss, or you can put at the high here. All right, and then you can see that the price is going down, and then even those like go up and then retrace or pull back at the support area. Okay, and then it's continue going down. All right, like again, if you want to put the short or the long, you can put as long as like the price is not go beyond the long term. Okay, it could be go up here and touch it, and then you can make another sale order here. Okay, you can just make it down, but cannot go above the long-term trend. Okay, if you want to put the sale order, right? And again, like I mentioned, that there is very a strong trend over here, because you can see that the separation between these two is really widen. So this very strong trend. Okay. Short. Okay. Okay. Back out. I just mentioned. Okay. Back out from console relation here again. The separation is really widen here. A very strong trend, and then you wait for the breakout just now, right? The green line cross below the red line. Okay, and then I you say it's really strong downtrend. Again, you place the sell order here, stop loss here, and then you can see the price is go to downtrend. So I think this is one of the indicator for me personally to use for identify the trend. Okay. Okay. Mm. Okay, I have another example of the like long or buy position. For example, here, let's say you already enter the order, like the buy order over here, right? Because you saw that there is a crossover at this area. Okay, and then you can see that you want to add more position. Okay, you have to identify or find that there is no crossover during the trend. There is no crossover, right? And then when you see the price is going until here, okay, and then you see that the price is pulled back to EMA short period EMA over here, and then you can put the buy order more if you manage your lot size very properly, or if you are not over trade, you can put more buy order over here. Okay, and you can see that the price is react to short term moving averages here. Okay, so this how you want to add more to like buy position. You can see that, right? So when the price it touch or react to long term over here, you may exit the trade because there is potential for price. Okay, from here you can see the price is changing already. So if you see like that, you might have to exit the trade. Okay, just close the trade and then exit, and then you come out of the market and see again where you can find the opportunity to enter the trade. Okay, for the short term, okay, for the short term you can no, let me see. Okay. Wait, sorry, why is like that? Breakout. Okay, for the sorry guys. Okay, for the chart example here, again, you see that price really close or below the long-term trend. Okay, and then you have a chart over here, and you can see that the price is a pullback. Okay, here pullback. You can add another order here, go down. Okay, pull back. You can add another like sale order over here. Okay, you can see that here, pull back. You can then you make another order over here. Okay, as long as the price is not go beyond the long-term trend, which is the red line, then you can add sale position if you manage your lot size properly. Okay. Okay, so there's a tip for for you guys how to use the GMMA is that when is the like how you determine the really strong trend, which is the distance between the red and the green moving averages here. Okay, which is a circle over here. Okay, this is like I mentioned, it's very have a strong trend direction. So this is gonna be downtrend. You can see that, right? And then the separation is wider from each other, is far away from each other. And one thing is that GMMA is, let me see. Is act as support and resistance. Okay, so how it works that you can see that when the price, maybe make is the example over here, so you make a sale, right? And then you see that price is coming down and then it's reverse. You can see that this is add this resistance, add resistance here. Okay, so this is one of another, they act as support and resistance. What is about the support here? You can see that price on uptrend, it pull back to the long-term trend. Okay, this act as support, and then it's pull back, resistance, and then this one pull back to resistance again. Okay, it's act as support. Okay, this is also act as support level. Okay, so you can use it to add more position or exit your trade as well. Okay. Okay, so how you can improve it, right? I mentioned that you can combine with price action or Ichimoku crowd if you know how to use it. Let's say in the screen you filter out, you use like just want to get a confirmation that is this going to the correct trend direction. So you pull out the GMMAA right here. Okay, and then you see that there is a crossover here, so it's going to change direction to the bearish reversal right here, and then you can see that price short-term cross below the long-term, which is green cross below the red line. Okay, and then you can see that price going down, and then you also can see that price also below Ichimoku crowd here, meaning that price is on downtrend. Okay, so you can use these two indicators to this to find the trend direction, or like to help you to get a confirmation or confluence. Okay, so these two you can use this to identify the trend. And then another one I'm using, you also can use like price action. For example, let me find the example over here, like price action. Okay, for example, like if you know how to draw like support and resistance, right? You can see from here. Okay, draw here. This one is already overlap resistance, right? So this used to be resistance. Okay, and then it's break above resistance, and then now act at support. Okay, from this level you can see that price is going up and then pull back here to resistance level, which is you make a line here, and then it tested as a short term moving average, and then you can see that there is have a big bullish candle over here. Okay, and then you can, from here, after it's closed here, you can place the buy order over here, and then you can see that the price is keep going up. Okay, this is like one of another indicator you can use it. And again, GMMA is a standalone indicator. So as you know, EMA is lagging indicator. So if you want to wait for the price or to the EMA to cross over, for example, I just go back to this one. Okay, like the price to cross over, I just want to find the clear. Okay, if you want to wait for the price to cross over right here, it might take quite a long time for them to close, and then you may miss the entry as well. So you use this one, use this indicator combine with maybe your own indicator, or you can combine with Ichimoku crowd together with price action, and then you can get a good entry from there. Okay, all right. So I personally use GMMA just to identify trend. So okay, let me see. All right, guys, thank you so much for tuning in today and tuning for the webinar today. Okay, let me know if you have any question. Okay, I will end the webinar soon. I think they have a recorded, right? If you don't understand any part, you can just go back and watch it again. Okay. I'm not sure why it's not moving at all. Okay. All right, guys. Thank you so much, guys. Thanks for joining. Hope to see you guys again, maybe next section. Okay. Have a good evening, or have a good morning, a good afternoon, wherever you are. All right. Thank you. Bye. Bye.